All right, guys. Welcome back. Second part of today's meeting. During the first part, we were trying to make the summary of what we discussed in relation to the possible supply demand, right? So we went through the basic stuff. Now we are going to try to make the summary of what we discussed last week in relation to the swing trading, in relation to unfinished business, and how that might help us when we are discussing possible supply, possible demand. As usual, risk warning, guys, please bear in mind, trading effects on margin, trading crypto on margin carries a high level of risk, may not be suitable for the investors who can sustain a loss of some or initial investment. So please do not invest the money that you cannot afford to lose. Seek education, gain experience before risking real money. However, past performance doesn't guarantee future results. All right. Let's have a look what we have on euro, dollar, and pound. We discussed some trading ideas before the break. Looks like market will look for liquidity around the weekly open and around the yesterday low. I'm talking about some stops. Actually, from the short perspective, market didn't do what I was expecting, actually. So at least for now, the idea is off. Looks like market took the advantage. Now, guys, of course, it's very tough to watch all the time frames. But here on the 15-minute chart, looks like we might have our answer why market didn't retest the higher levels. Guys, I'm giving it you for free, extremely valuable things. If you are going to get it, if you are going to understand what we are discussing, I truly believe your trading performance is going to be better. I truly believe, right? Of course, you have to focus. Of course, I'm sharing here many different things, but try to, at the very beginning, try to focus and master, try to perfect one, right? Then switch to another one. All the informations are available also on the Light Forex Global YouTube channel. Just check the archive section and you should be fine. Anyway, it looks like the market's moving lower without me this time. That's not a problem. There is still New York session later today. But when we are talking about the market, it's worth to check what is going on from the calendar perspective. And actually, for a whole day, we do have the OPEC meeting, and not many things besides that are going to happen before 4 p.m. CT. Half an hour after the US cash open, so at 4 p.m. CET, we are going to have consumer confidence, Richmond Manufacturing Index, and new home sales from US. From the dollar perspective, at 7 p.m. CT, we have a Fed Chair Powell speaks. And at the very beginning of the Tokyo session, we have a Bullard, right? As well as around the morning here in Europe, actually in the middle of the Tokyo session, we do have the cash rate from New Zealand as well. So the second part of the day looks like might be very interesting from the market perspective. So no worries here. So the euro dollar is falling, pound actually trying to break higher, and right now trying to hold important level. It's also visible, that's what we discussed, but it's also visible from this 15-minute chart here as well. All right. what we are trying to hold and why you should know right now. Okay. Dollar yen here, I think we have to wait and see where we are going to be at the end of the month. All right. If we are going to close, for sure, you remember the huge move to the downside at the very beginning of the year on the all yen crosses, right? With this shadow. But I think we can still, the swing low over here, we can take still into the consideration, right? So would be great if we can get the close above 2018 March high, right? So when we are talking about the swing low, the high over here, so that would be good if we can close above. Otherwise, most probably, we might see 103.40 again, at least 103.40 based on this monthly chart. I'm talking about this demand zone over here, where the low is around the 100 level. Okay. I think it's a wait and see mode right now. Also would be good to hold this level based on what we've seen to the left, with the possibility of over under creation. We'll see. All right, so let's try to discuss swing trading, what I mean by that, and how that might be useful from the possible supply, possible demands perspective, right? Just one thing, we're trying to stream live as well. We are inside the webinar room, right? But we are trying to stream outside. So it should be visible on YouTube. But the thing is, I can see only the chat. I'm only focusing on the chat here inside the room. So if you want to ask me the question, please join the webinar room and keep asking the questions, right? I'm not focusing on the YouTube chat. So if you are trying to ask something on the YouTube chat, I'm sorry, I'm not going to answer. So if you think it's interesting stuff, what we do here, just register, just logging into the webinar room, and you're more than welcome to ask questions. All right, so overall, swing high, swing low, and unfinished business. So the ideal situation, of course, guys, one thing, many different schools related to the swing trading. I'm not saying my is the best one. What I'm saying is what works for me. And again, not necessarily everything we are discussing here might be useful for you. I strongly believe few of them are going to be useful, few might not be useful. That's how it works, right? So again, here from the swing trading perspective, I'm going to share with you the way I'm using and approaching this topic. So basically, swing high for me Just one moment. There is a market moving higher, right? Again, market moving higher, and there is no new high, right? But I need the ideal situation. We have to. Now, the ideal swing high for me, ideal, almost like written in the book, right, would be when the candle before the high as well as the candle after the high both got the high at the same level. That's the basic for me I'm using when trying to approach possible supply and demand, trying to take the advantage of the possible swing high, swing low. Right? So the candle before the high as well as the candle after the high equal high. So some kind of the trap above for the buyers, right? That's how I see the things. So we are going to discuss, just 1 second, please. Give me 1 second. So that's the ideal situation. Next, what I'm looking for, that's the basic. Of course, the real life is completely different, and that's what I'm gonna to try to prove. That's the ideal situation over here. We are discussing when we are talking about the swing high, right? So that it's like, you know, the best looking swing, right? But for example, the next swing high, yeah, let's have this one over here. Oh, Jesus. Right? We didn't have this equal high. Sometimes what might happen that the high from the candle before the high might be lower, and we might have a little bit higher from the candle after the high, but below that high, right? That what may happen as well. So let's try to find that as well. $14.12, the high is double top. that might be swing high over here. That's the swing high as well, which been broken. But anyway, before the high was here, right? So what I'm trying to tell you is that we might have different things. The ideal would be the one we are discussing here, right? That would be ideal. So I know right now how the swing high looks like. Of course, opposite when we are talking about the swing low, right? It's going to be opposite when we are talking about the swing low. Again, ideal situation when these candles, the one before the high, before the low in that case, and the one after the low, they have equal lows. So trap for sellers, right? The next thing I'm watching, I'm observing, what I would like to see in that case, right, is where we have, after we hit the high, where is the close of that candle, all right? And now, very often, it's gonna be like this for me. Let's assume that's possible supply, right? That's, again, guys, it's very important. You have to understand, I'm showing some kind of the examples. Every next test of supply might be a little bit different. So you can try to master, you can try to perfect each of them separately, right? And once you are going to make plenty of tests, it's going to happen automatically that you are going to choose which approach you want to use to try to take advantage of the supply or demand, right? Now, based on this ideal situation when the possible swing high got equal highs on the candle before and after the high, now we are checking the situation that we don't know if we already have swing high or not. And we are testing the possible supply. Let's say this yellow box is a possible supply, right? So for me, the key here, trying to take the advantage of the possible swing high, the key here is gonna be the close of the candle inside the supply in that case, right? Or other logical level on the chart. Because you can take the advantage of the possible swing high, possible swing low, based on your market approach as well. So in case we have such a strong close without upper shadow, nothing like this, so meaning that the close of this particular candle is above the high of the previous candle, I'm watching, doing nothing. But in case we have the close at least, so we made higher high, but the close of that candle is at least Minimum requirement is close below previous candle high. Even better if the close is below previous candle close. Even better. But the minimum requirement here is to close below previous candle high. Minimum requirement, right? So in such a scenario, like this or like this, with the close below the high or the close below the high and below the close of the previous candle, in case of such a scenario, I'm trying to take the advantage and trying to visualize these things for myself, based on my expectations, based on where we are from the market perspective, right? Where we are testing supply. I'm trying to visualize in such a scenario that we are going to create swing high here. I'm a little bit of the front runner here. But in that case, I'm trying not to be the front runner, meaning that trying not to chase the market, the market is going to change something, right? Usually I'm waiting. But in that case, where I have a possible supply, where I have a candle setup I like, I know where's my entry, I know where's my stop immediately. I'm trying to visualize swing high. So my entry is gonna be here at the high of the previous candle before the one make higher high. So if market close here, I'm waiting for a rally and expecting swing high creation. Of course, I have to check what is going on here on the left side, right? I have to check what happened here to the left, right? If I have a space for the move to the lower levels, right? The whole context is interesting for me as well, not only the candle creation. I need to have a context. I have to know what is going on to the left side, right? Just don't forget, context is a key here as well. And my stop is not above the high. My stop is still above the zone, above the possible supply zone. My stop is 1 pip plus spread above. Right? Does it make sense? And I'm trying to take the advantage here of this possible swing high creation over here. So let's have a look what we have. If we can find some kind of the examples. And of course, opposite when we are talking about the swing low, right? We will try to visualize this as well in a second. So let's try to find some kind of the supply demand zone and try to check if there was some kind of the swing creation over there. Let's switch to 1 hour chart. That's gonna be a challenge. Let's discuss this supply. Let's discuss this supply based on this range and supply being done based on the drop base drop and move back, right? That's been created on the hourly chart, right? Because with this first drop, we took out imported demand, sorry. We made the base and we continue to the downside. So let's have a look if we have some kind of the swing when we retest this supply. On a smaller time frame. So that's gonna be our supply. So we are going to recognize this on the smaller time frame, and let's have a look what we had in the past. I do prefer to do this stuff on a real life, and that's what we are doing actually every day when we have YouTube meetings, live streams on YouTube, right? Just a reminder, we are covering live pre-London Open almost every day from Monday to Friday from 8 a.m. CET. There are the days we don't have the meeting, but usually Monday to Friday, 8 a.m. CET, pre-London Open live market coverage. And then Tuesday, Wednesday, and Thursday, we do have these educational live trading rooms from 2 p.m. CET when we cover the New York Open, right? So nothing is going on here based on this supply. Nothing is going on here on the 15-minute chart. Let's have a look if there was something just to check, right? If there was something based on the smaller time frame. No, the swing here was strong with this pre-candle high over here. No, it's not. And the strong close, right? So this one is a wrong example. Maybe we are going to have a chance to find the example during the market over the course of the day today. Because I can't see this one right now. The swing over here didn't work out as well the way I've been talking. Oh, we will find. But anyway, you know what I'm talking about. That's the first thing, how I'm approaching the possible swing high, possible swing low. All right, that's the first. The second, because we may try to look in the history, right? But it's better to try to look in real life. So that's why we have these everyday meetings. So there is no worries about that. Plenty of these things going to happen during our meetings. The next thing with the possible swing high, possible swing low, and let's say we have this kind of the close. So beauty is that we are looking for an equal high on the candle before and after the high being created, right? But very often we are going to get the next candle taking if there was some kind of the false break to the upside failure around the psychological level, we might see immediately reaction to the opposite side, not trying to even test this level over here, right? So no rally to the entry, just move to the downside immediately. Now, in such a scenario, that the second use case, in such a scenario, I'm calling the high of this previous candle and the candle where we made the higher high this zone, of course, is some kind of the supply, but the supply being tested, we tested logical level, right? But this space right now, when we didn't hit this equal high of this candle before the high, I'm calling as an unfinished business, right? And market got the memory. Market got the memory. At some point in the future, we are going to get back into that level. And in many cases, we are going to finish that business. We are going to hit that level. That's why I'm calling as an unfinished business, right? We are going to retest this level. There's going to be delayed retest. Let's call it that way, if it's easier for you, right? And then I'm going to try to take the advantage of that, all right? So let's have a look on the chart. What we have here. Of course, it's gonna weigh the same. We are going to have unfinished business with the swing low. Of course, the things we are discussing here today, much more reliable on the higher time frame than on the smaller time frame. The thing is that on a smaller time frame, we are going to have smaller stops. On the higher time frames, like daily, maybe weekly, the stops are gonna be much wider. But that's I'm giving you for free the things probably you never get before. And it's for free. The rest you have to adopt to what kind of the person, what kind of the trader are you? You have to, based on these tools, you have to build. You can try your own strategy. Okay, so let's try to find these unfinished businesses and let's see how the market reacted when we had such a things. Okay. Where we have some unfinished businesses. Swing. Here we didn't finish the business yet. Here we didn't finish the business yet. Here, first thing first, we hit the levels. I'm very curious because probably we had some kind of the possible intraday reaction. I truly believe we had. But still, right now, we have unfinished business based on this. What else we had? Very often I'm trying to take the advantage of this, and probably you've seen that before during our meetings. And maybe you were not aware what I'm talking about. Oh, here is the good example. Again, it has to happen. I'm trying to find the example to visualize to you, but it has to happen around logical levels, psychological levels, important possible supply and demand, right? Because if you are going to try to take the advantage of this approach in the middle of the nowhere, there is a biggest possibility that you are going to be stopped out. And of course, in addition, you have to watch carefully what is going on, right? Trying to, that might be the case, but we didn't hit that zone, actually, in my opinion. We didn't hit that properly over here. No, we didn't. Here was some kind of the delayed reaction with the pullback, but finally broke to the upside. Here is another example. Again, you want to see this around the psychological levels. After the time, we retest rejection. After the time, initial reaction to the upside over here. So hopefully you got the point. That's the second use case of the swing. All right. Hopefully that's clear. There is a third one. Third use case. 1 second. Stay with me. So the third one, thank you, Michał. Thank you very much. 22nd May, around 2019. We had a swing high over here already, so not that great example. But maybe you are right, because it wasn't that clear. No, you're right. Sorry. No, it's a 11th. You are talking about this one. So we had something like swing. It was almost tested, but yeah, you're right. You're right. Thank you. Good point. Now, the third use case. It's really, really, really very valuable. What and how to react in case of our ideal swing or even unfinished business, which been finished later on. What if this is going to be broken in the future, right? What if this is going to be broken in the future? Now, in many books, and I've been doing that for quite some time. But don't get me wrong, I'm not saying it's not correct. No, I'm going to explain in a second, right? So reading the books, you are going to get the info that after the break, right, it's good to try to look for longs on a pullback towards the broken high, most recent high, right? So our ideal swing in the future is going to be broken. So we have this break to the upside right now, and in many books you're going to find that the pullback towards the high is the optimal entry, right, with some stops below, right? I think and yeah, it's working, but what I'm trying to explain here is that very important, and I'm going to cover this after the lunch break. The important thing is, especially from the intraday perspective, the distance between the entry and the stop. That's the crucial thing. In that case, when you are going to follow the advices from the books, yeah, it's gonna work, right? But your distance between the entry, of course, not always going to. Sometimes it's gonna be like stop count, right? And opposite side. But from that perspective we are discussing right now, I'm gonna to take the advantage. It's, in my opinion, much more important. Because if there was a swing high and after that market went lower, so these 2 points, that's the crucial. Here was a trap. Here, that where the supply was stronger. So in that case, I'm not waiting here at the most recent high. I'm waiting a little bit lower. In most cases, some guys who are waiting here, they are gonna to be stopped out. They are gonna to run away. They are gonna be so scary. I'm going to wait one level lower. All right, so that's the third use case of the swing high and swing low. And of course, opposite, if you are going to have a swing low, right, and one day we are going to break the swing low, you are not selling at the retest of the low. You are selling on the retest of those 2 equal lows over here, right? Or you are trying to take the advantage of this, right? Okay. Now, because probably you are hearing about this stuff first time, maybe second, based on if you were here a week ago or 2 weeks ago. Don't take my words. Just go and test yourself. Do your homework. Right? You don't have to believe me. Just go and test it by yourself. So let's try to check the history and if it's working. Already twice today on pound and the euro, I've shown you when we are discussing what may happen during the day. I've shown you similar thing. So it was the real life examples. especially when the pound was reacting on the pullback, right? So let's have a look what we have. Let's try to, it's a daily. So let's switch to the hourly, should be more examples like this. Unfinished business. So no immediately swing high creation the way we were looking for. Reaction after, rejection lower. Then that's better. Then break to the upside, break to the upside. And look, guys, that was the difference. It was quite big because this close was strong, right? Difference of 4 or 5 pips in that case, right? One may argue, oh, 5 pips, come on. I'm going to prove you after the launch how big 5 pips is. So we were trying to hold, we were even trying to rally off that level, right? So we saw the reaction over here. Let's try to find more examples. Similar story over here. We broke finally through that high. And on the pullback, reaction was not at that high, but on the swing, where the swing was created. That didn't work that way this time. Another one. Swing high, delayed reaction. So here is perfect example actually. Here is a perfect example actually. So no real, not this super swing high we are waiting for. We didn't hit actually the high from this candle before we make the high. Delay. So we finish business next day. Strong rejection. Breakout through that level. Breakout. Pullback. Ask yourself, did we stop at the previous high over here before we went lower? Or we were trying to hold more important levels, the one we've seen rejection. So we might even get back a little bit lower here. It's gonna be almost to the pip over here, right? Okay, hopefully. Michał, working for you? Is it working for you? Very valuable stuff. Another one. Swing high. Plenty of them. All right. Okay, cool. The last thing, it's gonna be a challenge to try to explain that stuff, but I will try. I will try my best to try to explain you. I got many questions in relation to what we discussed many times over the course of these live streams, pre-London Open or New York Open. I've been trying to explain why, and we were live. It was non-farm payrolls when we were discussing this supply, which turned out to work perfectly fine, right? And you were asking what I'm talking about, because it was not that clear. It was not clear supply or clear demand and whatever. And I promise that I'm going to explain one day. So guys, what you have to understand, the guy, the whales, the market makers, the smart money, usually, right, trying to hide their intention. Usually, they will move to the opposite side before the real move, right? Meaning that very often it's going to be like we are going to see nice rising candle where the momentum traders will try to jump into the bandwagon and try to move to the higher levels with this after the nice candle. So let's try to imagine after the initial consolidation, we've seen nice intraday candle to the upside like this. That's what we discussed today as well, right? So it looks like almost like invitation for the buyers, right? But then suddenly, with the next candle or next 2, 3 candles, 5 candles, right? Suddenly we went lower. So everyone was stopped out under this one particular candle. Just guys, one thing. Don't try to sell each rising candle right now, or don't try to buy each falling candle. We don't have to do that. We have to, same as we discussed with possible supply, demand, possible supply, we have to have the knowledge to try to recognize it. Our action, because we cannot move the market. So that's the very good example where I'm not going to be front runner. I might be front runner when trying to visualize this swing high, swing low. That's what we discussed before. But here, all I have to do is sit and wait. In this case, once it's happened, when all those buyers were trapped, and once we have this breakdown, So at the first look, without the action happened after, right? First look. So we see after some kind of the consolidation market going higher, right? That's the invitations for buyers. So demand is based on the lower shadow and open of that candle. The yellow zone is right now the demand. So once we are going to get back below the yellow zone, once we are going to get back below this previous demand, we know where is supply. I do prefer open of that candle, but it might happen we are going to react immediately at the lower shadow as well. But that's why it's a whole zone. Check it, test it, try yourself, do research. You don't have to believe me and thank me later. So let's have a look. Let's try to go through the charts. Let's have a look what we have here. If it's really that valuable, as Piotr is saying. So let's have a look. Of course, the first thing first is euro dollar and the range from the 20th of March. Ta-da, ta-da, ta-da. There you go. We are talking about this break to the upside, right? Man, we took out the previous high. Significant one, because from here, we broke to the downside through few nice levels. Significant. And we took it out. Great invitation for buyers. As long as we are above the bottom of that candle. Huge invitation worked only one day. Right? Breakout, pullback, nice buying opportunity. Few guys earned some money. And I would do the same. I'm not a guy who can move the market. I would wait in a logical place to try to buy it. Pretty sure it was the reaction. Probably there was a chance to earn some money. I wouldn't sell. There are few occasions I would try to take the advantage of the upper shadow over here, but not this time probably. We are going to discuss examples when they are going to appear live. But I knew it. Once we close below, the open and the low of that particular candle from the 20th of March, I knew it that here is a big, big, big supply. We didn't actually test it here. We didn't test it here. What we were discussing, go archive section, Global Light Forex YouTube channel, check few recordings. What we were discussing about that high and that high. We were discussing even during the day here, during the non-farm payrolls, we were covering, as far as I remember, if I'm not mistaken, that was the non-farm payrolls, and we were covering this particular non-farm payrolls live. So it's enough for you. Probably we were discussing this stuff. That was the liquidity pool. Stops above. Real supply was here. We are discussing the shorts over here as well. As far as I remember. Oh, maybe I'm making mistake. Anyway, that's the best example to what I've been trying to explain you. Again, don't take my word. Do your own research. Go through 100 examples and then we can discuss it. Not because usually it works like this. Someone is showing something and the listeners trying 5 times, either they are hating or falling in love with this, right? Once they are hating because they tested 5 times, didn't work out their way. So it's bad. Doesn't work. And the lovers, they try 3 times or 4 times, and they have fallen in love. They're saying that they discovered the Holy Grail. No, we can discuss it after hundreds of times of tests. Then we can try to discuss, okay, statistics, is it working? Is it not? Can we improve something? Can we make it better? Whoops. Small accident. Anyway, let's try to find few examples. Few more. Let's switch to smaller time frame, should be better. So that's why I told you earlier today on euro dollar, the one from yesterday, from Tokyo session, as long as it holds, it's going to work as a demand. And yesterday during the European session, actually it worked well as a demand. But let's try to find the one didn't work out the way more of the market participants were expecting. Not great place, and probably I wouldn't. Well, it's not that bad because we took out this low over here, and it was in relation to. We were discussing this. It was in relation to payrolls. It wasn't a great place because that was here. That was demand based on the non-farm payrolls, right? And here was supply based only on the candle. Probably I wouldn't take that one. But that's just to show you, right, what we are talking about. Reaction of the possible support, right? This particular one. Right? Reaction into what we've seen the day before. Nice looking candle, so invitation for buyers, and the next candle, boom, retest, another retest, whoa, boo, doo, boo. Of course, it's not gonna work 100% of the time. Here we should have, let's check, we should have finished business. And after the breakdown, retest of that, let's make it a little bit bolder. First, we were trying to finish the business. And actually, we're not able here. There was some reaction into that price action. So we saw the reaction over here, but then breakout. Let's check if we have something more. Nice looking possible supply. Nice, the biggest candle within some period of time. Nice looking supply. In that case, invitation for sellers. The only thing is, that it was the move out of the possible demand, as I can see green color, out of the possible demand from the higher time frame. So what happened after such a candle? Nice invitation for sellers. Then rally above. But we know we don't want to use in buying opportunities upper shadows. We want to use the zone. Oh, coincidence? Oh, I'm sorry. Ready for lunch? Are you ready for lunch? Or you want more? All right, guys. Lunch break. And we are going to discuss a little bit of the money management from the insti perspective, meaning that in the future, if your plan is to try to trade for the institution, would be good to know a few things. You can, of course, apply this type of the money management into your personal trading. Of course, it's tough because homemade trading is a little bit different than what insti are doing. But we will try to discuss a few things. So no worries. So there is a lunch break right now. And we are going to be back 2 p.m. CET, so New York Open. So we are going to discuss money management as well as we are going to watch what is going on at the US Open. I think it's fair. So I'm going to stop the recording right now. All right. Room is open. I'm going to stop sharing my screen right now. Room is open, but let's have a fresh breath. Lunch break, some drinks, but non-alcoholics only. Okay? To be on the safe side ahead of the New York Open. So enjoy your break, enjoy your lunch, and see you around. Have a good one.